You want to read and interpret income tax tables, there's some things you should know. First, your income tax bill and your income tax rate are based on your taxable income. The tax system in the United States is progressive, meaning that the tax rates are marginal. The higher your taxable income, the higher the tax rate you will pay. Taxable income is broken into brackets or ranges of income. Each bracket has a different tax rate. Here is an example of a tax table. There are steps used to calculate income tax owed using a tax table. The first step, you want to find the bracket or the line on the table for the income value that you're talking about. Step 2, the first amount in the right-hand column is the base amount everyone in that bracket will pay. To find the excess, where it says 12% of the excess, to find that excess, we will subtract the income and the second value listed in the table. Finally, the tax owed is that base amount from step 2 plus the given percent of the excess, which we find in step 3. Let's do some examples. So we're going to use this tax table below to determine how the income tax on $75,000 would be calculated. So just thinking through this process. So first, we know that $75,000 falls in the third row, where it says the income is over $40,525, but not over $86,375. We know $75,000 falls in between. Therefore, to calculate the income tax on $75,000, we would take the $4,664, there's that base amount, plus 22% of the excess over $40,525. That is how we would calculate the income. All right, let's do this. So how much of that income of $75,000 would be taxed at that 22%? Okay, so I know again that the tax owed is $46.64 plus the 22% of the excess. So we need to find the excess amount. So we are going to take our income and that second value. So you can see in the right column, the excess over $40,525. So that's what we are going to subtract from our income. So $75,000 minus $40,525 gives me $34,475. That is the amount of excess. So that is the amount that would be taxed at 22%. So if I want to calculate the income tax on that $75,000, I'm going to take the $46.64 plus the 22% of my excess. Well, we know my excess is $34,475. So I'm going to take my $4,664 plus 22%, which is 0.22 as a decimal, times that $34,475. When I multiply 0.22 times $34,475, I get $7,584.50. Therefore, when I add that to my base amount of $4,664, I get a total income tax owed of $12,248.50. Now, there are different tax tables, right? Depends if you're filing jointly or head of household, all kinds of things, and they change year to year. So you do want to make sure if you're looking at a tax table that you're looking at the one appropriate for your situation. Let's do just one more example here. An engineer has a taxable income of $125,990. How much is taxed at 24%? Well, if we find out first 125,000, that's going to be in our fourth line. The over 68,000, but under 164. So we know that the taxes owed are going to be 14,751 plus 24% of the excess. So to find that excess, right, that's how much will be taxed at 24%. So I take my income, $125,990, and I subtract that given value in the right side of my table, $86,375, and the difference is $39,615. So that is the amount that will be taxed at 24%.